All right, well, welcome everybody. We're just doing a quick sound check here to see if everything is working okay, and can see the visual there is up for the slides, but just let me know if you can hear us okay, and that would be great. Stock time, good morning. Gilles, good morning from Montreal. Awesome. Looks like a lot of folks are able to hear us okay, so that's great. Love the participation. You're viewing Stan Heller, by the way, in the little window there. Marguerite, good morning. Mick, good to have you with us. Bob, Michelle. That's awesome. Reg from Austin in Texas. I love the international flavor of these event. So it's just great to have you all here. We're just a couple of minutes away from starting officially, and we'll get things underway right as soon as the time hits the 11 o'clock Eastern. Basil says sound is good. That's good. So that's what we like to hear. And Edgar from San Francisco, one of our favorite spots to visit, and we had someone from Tucson, another favorite spot, and Robert from Kalispell. We're pretty close. I live in Lethbridge, Alberta, so we're just an hour from the U.S. border, and maybe another 3 hours or 2.5 hours to Kalispell from the border. So it's a nice little setting that we have here, pretty close to the mountains. Matt says all is good, got the thumbs up, so I think we're good, and we've got about a minute to go, and then we'll just introduce everyone formally or get started formally. Oh, Bob says snowing in Massachusetts. Oh dear. Our daughter Jaleese is doing RNA research in Boston. We've been down to visit. She's just been there since April, and they had virtually no snow this winter. So they're getting it today. Steve, today's webinar is about 90 minutes. So might be a little bit less to see how it goes, but about 90 minutes. Mohammed, welcome from Vancouver. And okay, it's 11 o'clock Eastern. We're going to start. Welcome everybody to our VectorVest International Online Forum. So great to have you with us. Just note from the homepage here, please make sure your computer speakers are turned on and up so you can hear the audio portions. There is, at the bottom of your window, you'll notice there's a wheel, and you can click on that to adjust the settings. If the quality of the sound or the visual isn't what you think it should be, then click on the settings button at the bottom of your screen. That would be great. So welcome again, everybody. This is Stan Heller with you from Lethbridge, Alberta in Canada. I see a lot of familiar names in the chat, and it's great to have you all with us, and great to have the new folks here as well. And if you're new, maybe just chat in that you're new to VectorVest, and we'll make sure that we answer as many of your questions today as we can. I'm just going to move along to the next screen, to the agenda, see if it moves forward for me. It's a little bit of a lag on my screen, I can see. There's the agenda for, oh, it says for February 4th. Well, it's actually March 4th. I'll fix that before the slides go out. Really happy to have Dr. David Paul with us again to do the market forecast for US and the UK, and very, very pleased to have our good friend Mike Simonato from Blue Mountains, Ontario. He's done 2 or 3 presentations for the International Forum already, and they've been so well received. And I think there's a lot of interest in this topic, trading made easy, the advantages of ETFs. So stick around for that one for sure. The replay, obviously, we're on YouTube, so the recording is going to be available almost immediately after the webinar, and that's where it's going to remain archived, so you can access it even a month from now or 2 months from now. The slides, VectorVest sends everyone an email Monday afternoon that has a link to today's slides. please check all your email folders if it's not in your main inbox. And by Monday afternoon, if you haven't received the slides, make sure you drop me a quick email, stan.heller@vectorvest.ca, and I'll make sure the team gets an email out to you with the slides. Dan, welcome. Great to have you with us. All right. So quick risk disclaimer. Nothing that we're going to talk about today should ever be considered as investment advice. We don't know your personal situation, and we're not licensed to provide investment advice, but we are here to share information and teach about the VectorVest program. So everything you'll see in here is for educational purposes only, should never be considered investment advice. All right. So what we like to do at the start here, and let's see, did I cover this in the agenda? We're going to do the VectorVest markets around the world just to see what's going on worldwide. It can help us if all the markets are trending in a certain direction together, we can make better decisions about the markets that we trade in. So just looking at the top left in Canada, year to date, we had such a great start in January. We've slowed in February, like most countries, but 5.86 year to date. And after what every investor went through, I believe, last year, it was a tough market, a volatile market, and disorderly market. And so 5.86 to start is pretty good. And you'll notice we do have a green light in the RT column for Canada, so that's good. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. We see the primary wave has turned up. We have a DEW up signal as well, and that's been a very reliable signal. There's going to be some whipsaws from time to time, but the DEW is a very reliable signal. So the VVC reversed course over the last 5 trading days, and we did see that primary wave come up. And the RT buy-sell ratio and MTI also finished higher, but there is a word of caution. Inflation and interest rate concerns continue to surround the market, so we just need to take things one day at a time. But if the futures are up on Monday, the market opens higher, and you've got your watch list, you should be prepared to step in and maybe open smaller positions, fewer shares, fewer number of shares. On the US side, the year-to-date 7.46, and the color guard is mildly bullish. They have a green light also, but it's in the buy-sell ratio. It moved from below 1 to above 1. So we get the green light in the buy-sell ratio. That was a really big move in the number of buy-rated stocks on Friday, yesterday. So they've got the primary wave up as well, and the DEW up on the US side. So again, the color guard is mildly bullish, and they're citing mixed messages from the Fed Reserve governors, upbeat economic data, and some big earnings still trickling in, combined to reverse last week's downward trend. We're just about through the earnings season, but that's something we've emphasized in our weekly webinars, is how important it is to know where the earnings dates are for the stocks you own and the stocks that you might be thinking about buying. All right, so proceed with caution. We've got Fed Reserve Chairman Powell's testimony to Congress and the February jobs report in focus for the upcoming week. So just be cautious. All right, and while I'm on this page, I'll just show you where we were at in January. You can see at the top right, Canada, US, Australia, Europe, and the UK all had good, strong, bullish months. February, everything turned and was a little bit weaker. Europe did manage to eke out a gain, 0.84%. And then again, we have the year-to-dates. So Australia, the color guard is neutral, 3 yellow lights across the top. They did go through a spate of, the red lights, and we're in a confirmed down call. And still in a confirmed down, did not get the primary wave Friday. So it was weaker than expected GDP data, and rate hike fears weighed. And so just need to be a little bit cautious. The primary wave could turn up on Monday, the next trading day, because we did have a pretty strong price action on Friday. Europe, the color guard is somewhat bullish. VectorVest advocates buying safe, undervalued stocks, rising in price. 2 green lights, primary wave is up. They're still in a confirmed up call. And it was the rising mining and energy. And certainly gold stocks were rallying across the board, and selected energy stocks were moving the market as well. So a little word of caution about interest and inflation. I think we're going to see that for quite a few months yet. But the UK up 5.69% year to date, 2 green lights again in the color guard, and the color guard is somewhat bullish. Big move up in the buy-sell ratio and the MTI as well. And it was encouraging manufacturing data from China and gains in mining. So David Paul will certainly speak more about the UK and the US market. All right, and I'm checking the internet, the YouTube channel, just to make sure I haven't missed any questions here. My email address, stan.heller@vectorvest.ca. I've got it on a slide when we finish. This is what the Canadian market timing graph looks like. You can see we have this upward sloping trend line, which is quite strong. The 20 or 65-day moving average, this light blue line, had been moving up quite nicely. Then price did fall below it for a brief period. We got the confirmed down call, or on the DEW, I should say. We're in a confirmed up call since November, but we did get a DEW down signal for a few days, and Friday it reversed course. We see price above the 30-day weighted moving average. We see the DPO above the 0 line. That's the criteria to get that up signal. Notice on Friday, the 1-day Derby winners and 5-day Derby winners, basically all bottom fishing strategies. Even Gold Digger is a bottom fishing strategy that focuses on the gold market. And so you can take your cue from that. Lots of matches in the 1-day and the 5-day. So when we look at the emotional market cycle and where we're at, we're on our way down on the right-hand side into this anxiety and panic and despair. And then Friday, things have turned around a little bit. We got the MTI above 1 for both Canada and the US. So, we didn't get all the way down to a blast off, but we're sort of in that trending phase of the market again with a move to the upside. Yeah, Paul is testifying this week coming up, William. I maybe didn't express that correctly, but it's coming up. All right. All right. You'll notice Angie Akers had a wonderful essay on the 7 deadly sins of investing last week. This week, David Paul has an essay on the 7 deadly sins. This is my essay. I referred to Madoff, the Monster of Wall Street, the Netflix 4-part docu-series. I mean, I'd seen and read about Bernie Madoff prior to this Netflix series, but this was exceptional. And Dr. DeLito, our founder, that's in January when that series came out, is when he started to highlight, for the instructors at least, the 7 deadly sins of investing. And in the Madoff series, we saw greed, deceit, and sloth that jumped out. But there was also hypocrisy from the point of view the SEC regulators were exposed for not following their rules. So just keep in mind, you can open any of our 5 countries, our world markets, and read the essays on Fridays and stay informed about what's happening in the various countries as well. All right. So I wanted to, before I bring in Dr. Paul, I just wanted to share something that I like to do. And I had some email correspondence that people are using this technique and I thought it might be a good idea to share it with the VectorVest international community, if I can say. And so what I'm showing here are basically two searches using the near perfect indicator searches. If you have the ProTrader add-on, you'll see a folder in Unisearch that has the NPI crossing 1 day and the NPI crossing 3 days. And all I'm doing here is using these searches with a watch list filter for some of my favorite watch lists in the VectorVest Canadian software in this case. And these are some of the stocks that come up. And then you can also just focus on one watch list. The one at the left focuses on several watch lists. So I'm going to just go in there and show you, and then I will show you how you can use the new buy-rated search that everybody has access to find some great candidates as well. So let me just pull up Canada here. Hopefully everybody can see that. I'll wait till it gets to the screen in YouTube. Sometimes you have to hit that share button again. Oh, no, there it is. All right, so we've got it there. So I'll click on the Unisearch tab, and I've created a new search here in the watch list. It's called watch list filter searches. But here, if you scroll down under the near perfect indicator, you'll see the NPI crossing 1 day and the NPI crossing 3 days if you have the ProTrader add-on. So really what I've done here is crossing 3 days with selected watch lists. So here, if I click on the value, well, let me start here. Stock watch list. So it's stocks, filter by, and watch list. Equals is the choice. And then you can see I'm looking at all the TSX capped indices watch list, which is an excellent source of candidates. I'm looking at the TSX 60, TSX small caps, and the global gold index. And I was looking also under special watch lists. I was looking at the master retirement watch list. So you can choose your watch list. I like the dividend aristocrats watch list that we have in Canada. You have the dividend payers watch lists for aristocrats in the US. And I also really like the high CI. Oh, if I go down a little bit. Take that one off. The high CI favorites is another one. So once you've got all those searches, you can run the search. And these are some of the top 10 stocks that come up, sorted by VST. And I'll just click on graph all so you see what we're looking for. And I've got a 20-period moving average running across. When we get price above the 20, as well as the 5 moving average of RT above the 40, the 5 moving average of stop above the 40 moving average of stop, you're in a really good place with these stocks. And we did just get a little bit of just a very slight breakout above this recent high. Steve, that's excellent. Steve, RT40 from the UK has a terrific idea that I want to share. He says, I have a master watch list with some of the great NPI 3-day breakout US stocks, especially the oil stocks. That's terrific. So just to share some ideas here, Aecon had a big announcement on Friday, big volume, you can see, and the breakout, and it's just broken above the 40 moving average of RT. So I think there's some room to go there. And Stelco blasting off. Phoenix, this is a 5% dividend pair and a nice little breakout there. If I take my freehand line, I can draw a little trend line across the tops here, and we broke above it. Nice little triangle wedge. So some really great ideas. C&Q, TCW. This one's been in a channel if we get a breakout. So my suggestion is if you see a stock that you see is ready to break out, like CVE, put it in a watch list and call it trade opportunities for the next day, or just some way to identify it, and keep an eye on it, see if we get that breakout, and then you're ready to go. Tourmaline, the HNU, Horizons Natural Gas, to the upside, had a big breakout Friday with an 11% gain, and Tourmaline is a natural gas explorer and provider, distributor, and so that's got some potential as well. Precious metals, the gold stocks have been jumping. Payto, 10% dividend yield. If I put on the dividends, you can see they pay monthly, and it's in the master retirement watch list as well. So some good opportunities there. All right, and then if you switch to the NPI crossing 1 day, or sorry, 3 days with one search, you can, for example, I've got showing the master retirement watch list, and there's the 3 stocks. Cameco is the one that you didn't see before. All right, and then just on the new buy rated stocks, here is with the selected watch lists again. So you're getting a good look, and this is a really terrific search. Everybody has in their program under trends, new stuff down here. Everybody has new buy rated stocks, okay? And so you can just, what I did is just create that up here with the filter for the watch list. So here's the new buy rated with selected watch lists. And then when you graph them, you just want to look to the left and say, well, is there a breakout opportunity here? Here's ATD, pretty consistent performer. Little breakout there, a little bit of room to go to the upside. There's Phoenix again. So we just saw Phoenix in the other list. NPI breakout with CVE as well. So here's kind of a little flat line here. And a little breakout. So it's just broken above the 40 moving average of the stock price. Really an excellent candidate. All right, so I just wanted to show a little technique that you can use. Grab your favorite watch lists, add them to your favorite searches, and I think you'll find some pretty terrific candidates going forward. That was a good one right there. It's amazing how it turns up these great candidates. Just the 5 moving average of RT crossing above the 40 and a new buy rating up at the top. You can see that there. How many of you think you could use this technique? It seems pretty simple, but just let me know. Just type in between a 1 to 5, a 5 being I like it, I think I can use this, a 1 being it's not for me, 3 just in the middle. But just type in a 5 if you like this kind of approach. I'd be interested to know if you think that you can get some good candidates. You can use this in every country, of course. So we've got some 5s coming in. Tony, yeah, now they're going by too quick. A couple of 2s I see, so not convinced, so that's all right. Andrew's a 3. And if you've got a technique already, a setup that you look for and a way to grab them, Stock Time says, I've been using it. That's awesome. Paul's using it. So that's awesome. Well, that's great to hear. I really appreciate your feedback that it's something that you would be interested to use. And Raphael says, I'm using it already and making money. That's the important part of it, isn't it? Chris says, if you tie this to rising earnings and undervalued stocks, it really works. And that'd be easy to add those criteria to the searches, Chris. So that's an excellent idea. All right. And Neil, if you have questions about real time or the Pro Trader, you might want to call support for the most current information. Okay. All right. Well, listen, I'm glad that was helpful to everybody. There's some pretty good trade ideas there. This is the WOW dividend search that I highlighted here. So new buy rated stocks. I didn't think we'd ever see Algonquin Power as a new buy, but there it is after the big collapse. And even after kind of revamping their dividend policy and cutting their dividend, it's still a 9.3% dividend yield. Pretty crazy stuff. But if I look at the graph, stock graph, and when I'm looking at dividend pairs, I love to look at a 10-year graph. So you can see the rise that we had with Algonquin. It was pretty terrific. And then the collapse was also pretty spectacular as well. So it is a new buy rated stock though. So there you go. All right. Close out of that. So these searches will be in your slides when you get the email from VectorVest on Monday. All right. And with that, we'll bring in Dr. David Paul to talk about the UK and the US. So David, if you want to grab control.
Okay, I'll try.
Okay. Yeah. And thank you for those that are smashing that like button. That really helps us know that you're appreciating the content. We really value that. So thank you.
Can you see the blue screen, Stan?
Yeah, I see it. It's looking good.
Okay, that's great. Well, good afternoon, everyone. Well, at least good afternoon from the UK. I won't keep you long. We've got an exciting guest speaker to come on, so I won't keep you long. First thing I have to do is put up the VectorVest UK specific disclaimer. I'm qualified to give financial advice, but I can't do so because I haven't sat down with you and done a long and a detailed fact find. I'm allowed to talk about stocks that I hold myself, but I have to make it very clear that although those stocks are suitable for me, they may not be suitable for you. I'm also asked to say that I frequently hold positions in commodity stocks, and those stocks are subject to the ups and downs of the commodity cycle, and they certainly will not be suitable for long-term buy and hold investors. So that said, we can move on hopefully to matters much more interesting. We move on now. We can move on to the US market, the US market has sold off, as we all know, over the last, 10 days, couple of weeks. Largely that was because the capital markets have upped the peak estimate for US inflation from what was their best shot 2-3 weeks ago at 4.8%. They've upped that to about 5.3, 5.4% over the last fortnight, and inflation going up, if you've seen from Dr. DeLito's slide, is inflation, earnings, inflation, and interest rates are the primary source of valuation of stocks. So as interest rates go up, valuations come down, and that's what's happened to the stock market over the last little while. We are at an interesting point in that we had a really nice run on Thursday and Friday. I was expecting that. Anybody that came to my Q&A last Monday afternoon, I was expecting a 3 to 5 day at least bounce. And that's what's happened. Whether this is a resumption of a bull market or whether it is a 3 to 5 day bounce, I'm really not that sure. And if we blow it up a little bit, we can see that the buy-sell ratio has advanced above 1, and it's up day over day and week over week, which means we got a green light there. The MTI's pushed its way back above 1. And that means that we moved from a down situation at the close on Thursday to an up situation at the close on Friday. We've still got a confirmed down in place, and it's going to take a day or two for that to change because, as you know, we have to see a couple of weeks upward motion to get a confirmed up. So aggressive people can certainly start to buy in. Let's have a look at the detail. that is a weekly chart. And as you can see, that's since COVID. And we've had the big run up that we all made a heap of money in. It's probably caused us to lose money in the pullback because you get slack after a big run up. So markets have pulled back, and at the moment, that's an 8-week stochastic that I've been using for a quarter of a century. And although the market can run up from an overbought situation, it's always best buying the market when the 8-week stochastic is right down on its knees. So we pulled back a little bit. The pullback I thought would be more severe. It's only pulled back a tad, really. And that's the pullback that we've had over the last 10 days as that peak interest rate has been hiked. This is a 8-day stochastic now. So the previous was an 8-week, this is an 8-day. And as you can see, the 8-day stochastic is down where the stochastic is below 20. It's also showing divergence, reverse divergence, which I know confuses a lot of people. The market's rising, this is falling. That's actually a stronger form of divergence than normal divergence, which most people are familiar with. But based on that, I was expecting this 3 to 5 day bounce, and it's probably got some way to go yet. I think it'll pull back on Monday a little bit before going again, if it does go again. I thought it was going to move in the middle of the week. It took its time until Thursday. This 3-wave pullback is also good, and as you can see, there's a huge level of support where that resistance becomes support. So probably another couple of days, whether it's a bounce, whether the bull market is going to keep going from here, I wish I knew. If I did know, I would sell up this wee property in Notting Hill and put everything else on everything I've got on the SPX. But nobody knows. Nobody knows what's going to happen next, folks. Only a complete idiot would say that they know what's going to happen next in this market. But I believe from reading on Bloomberg this morning, there is a new exchange-traded fund, Stan. This exchange-traded fund invests in shorting what that fellow in the TV every afternoon says you should buy. What's that guy who jumps up and down in the TV? If he says buy a stock, this exchange-traded fund is going to short it and see how they get on. So you can read the story. It was on Bloomberg this morning. Nobody knows what's going to happen next, folks. Mike Wilson at Morgan Stanley has been very vocal recently. He's a good man. And he's calling the S&P down to 3200. But at the same time, Morgan Stanley has upgraded Apple to 180. And that's not going to happen. Okay, if the S&P falls, Apple will fall with it. So they are, in fact, the left doesn't know what the right is doing there at Morgan Stanley. Although I must admit, Mike Wilson has got an awful lot of clout. At the moment, technically, we still favor this being a bounce because the weekly stochastic is pointing down. So that's the technical situation. At the bottom here, just there, way back at the lows, the daily stochastic was in an oversold position, and the weekly was in an oversold position. And when the daily stochastic and the weekly stochastic say the same thing, that's the basis of a very, very good timing system, I may add. So this is the more conventional VectorVest market timing. I've taken the RT off. I'm looking at the MTI, and I'm looking at the buy-sell ratio over the last year, I think. And as you can see, all of these confirmed ups have come to very little. That was a pretty good one. And we've now got a little bit of work to do before we get another confirmed up here. However, the MTI is showing some form of reverse divergence, which is good. And so is the buy-sell ratio. So if Steve RT40 is listening, Steve and I talk about divergences. the way young men talk about young ladies for some reason. But I think that that's a reasonable reverse divergence there on this. So I am hopeful. I take it a day at a time. There's the DEW. The DEW, I think Stan said in a moment that the DEW in Canada has turned up. It's turned up, as we'll see in a second, in the UK. But this is just a little bit away from, I think, another decent day, and this will turn up. So this is the DEW signal for the US, very, very close to giving a buy signal. And that's the bullish view. And I have a great deal of sympathy with that view, believe it or not. I think an awful lot will depend on the Fed meeting. That's March the 22nd. I think a lot will depend on inflation data. And I see already that the M2 money supply figures are falling in the US economy quite fast. And many people look on that as a leading indicator of inflation. It certainly was the case over the last 20 or 30 years. So those of you that are economists that get turned on by that sort of stuff, there's lots of work to do there. Again, I see on this monthly chart, a very strong reverse divergence on a monthly stochastic. And I was taught this stochastic indicator by its founder, George Lane. And George was a commodity trader, and he would look at monthly, 8 stochastic, he would look at weekly 8 stochastic, and he would look at daily 8 stochastic, and he would line them all up. That was the basis of his trading system. And in 1986, I paid $3,000 for that insight. So I'm still reasonably bullish here, and that would take, believe it or not, that would completely wreck Mike Wilson's prognosis, because that takes the S&P to 6,000. There's the S&P 500, and I'm so proud of this one because on Thursday afternoon at 2:30 UK time, as the market was opening, your humble correspondent was recording the Fibonacci section of the new technical analysis course. And in the course, those of you that have bought the course, you will see my trade in the S&P time stamped in the course itself. I bought the 62% retracement just there. And I'll give you the number now, 39.35 with a 20-point stop, right at that 62% retracement. Again, there's the reverse divergence. It went on a bit longer than I thought, but my first desk head was a guy called James Allen, and he always used to shout at us, wait for the 62% retracement, they always occur. So as you can see, 1, 2, 3, 4, 5. That's a falling wedge, very bullish, or 3 drives to a bottom, the Fibonacci people. But this has moved up very, very strongly. So I was waiting on that move all week, and I took a few losses, 2 losses in this little bit, but made it all back there. So I'm very, very proud of that. That was the week that was. I thought the market was going to bounce there. It didn't. I thought it was going to bounce there. It didn't. Got stopped out. Small got stopped out there. Shorted it there. And then finally on Thursday, that was my buy-in, and away it went. Whether that was by design or whether the blind pig will sooner or later discover the corn, I really don't know. I shall let you decide on that for yourselves. I trade the S&P, folks, for expenses, and I paid my expenses out of the S&P for a very, very, very long time. Prior to that, I had to go at the Forex market, but the SPX is much, much, much easier. US bets, well, none at the moment, but I'm watching John Deere, and I see this lovely smiley face, and I see this lovely bull flag. I think I've made more loot out of bull flags than any other pattern in the stock market. And it would seem to be wanting to break out. If the DEW gives me a buy signal, then I'll have a go at that on Monday with fairly tight stop loss underneath that low somewhere. So that's starting to look quite good. And I've been watching that for a while now. If we put on the near perfect indicator, we can see that it's also very close to giving a signal, but it's giving a very important signal because, as you can see, that's rising and this is falling. So we've got reverse divergence on the RT40, and that's a very powerful signal. Okay, and I wrote an essay about that 2 weeks ago. So if you want to go to VectorVest UK, have a look at my essay. A signal from the near perfect indicator, which is preceded by divergence, is an exceptionally strong signal. So that looks very good indeed. This is another one that I'm looking at. This is STM, and it's a flag, as you can see. Where's my pen? As that's rising, volume's expanding, and now we're going sideways, and we can see that the volatility is drying up here. Some people call that a volatility contraction pattern, and we had a presentation in the UK from Mark Cowan about volatility contraction patterns. Mark, if you're listening, would you class that as a volatility contraction pattern? A bit worried about this big volume, but that big volume happened on an up day here. So not the end of the world. Again, DEW and a breakout there. And I think that this bit could be, in fact, repeated. On John Deere, the target would be this bit, and that's one hell of a lot. That's okay, it might be this. Some people would argue it's that, but even that is one hell of a move. So those are two potential moves that I can see. And this is another one. Guess what the pattern is. The earnings per share are not so cool here. But somebody knows something because it ran up here on huge volume. It's pulling back a much lower volume. And we can see on the up days, people are having a go at it and would seem to have broken out on reasonable volume. Again, just waiting on a DEW signal. So that's three that come to mind in the US market. I wish I knew it was going to happen next, folks. But I think we can have a couple of good days. But I would be very surprised if we didn't pull back maybe to a 62% retracement of the up move Thursday and Friday on Monday and Tuesday. So in the UK, well, we didn't get that confirmed down we got in the US. Markets are, the confirmed up has been placed since the 5th of November last year, I think. We are in an up situation. We've got a couple of green lights. We look at the detail. We can see the buy-sell ratio moving up reasonably respectably at 1.67. And VectorVest advocates buying safe undervalued stocks that are rising in price at this time. I haven't done that much because that only happened on a Friday. I'm not a great buyer of stocks on a Friday. There again, we can see that the 8-week stochastic is in the overbought situation. Always best when the daily and the weekly are all saying buy at the same time. We had a big week up, and for the last 4 weeks, we've traded in that range. So the relative strength, not the relative safety, the relative strength of the UK market has been very strong compared to the American market. And as the chap said on the summary, that's to do with China opening, strong commodity prices, and all that sort of stuff. So here we've got the daily, and pretty much the same story as the US. We've got this market has pulled back and maybe a cleaner signal than we got in the US. The stochastic gave a nice clean signal here, and we're moving up quite nicely. Hopefully that's going to keep going. Again, there's the confirmed calls, and again we've got a bit of divergence here. That's rising, that's flat, a good sign, and that's the confirmed up that's been in place. I think it's the 5th of November, within a day or two, something like that. We nearly got knocked out here, we nearly got knocked out here, but as a great rugby commentator of yesteryear would say, the ball is in and the game is on. A Scotsman by the name of Bill McLaren. So that is the DEW, and the DEW just stuck its nose above water on Friday, and that's saying that in my swing trading business, I've got permission to buy some stocks. That only came after the close on Friday. I haven't done anything. I bought one stock last week. That was the U Group. I'll show you the chart in a minute, but I'm reasonably happy with what I've got. I'm about 60% invested, and reasonably well, not a 2021 type performance, but reasonably up for the year. That's the U Group. I missed this bit. I had a bout of bad health last year, so I wasn't in the best of form. But I'm really upset that I missed this, because that's just a textbook ascending triangle and the breakout of the ascending triangle. This is a little triangle. It broke out, but I really like these wicks. See the wicks down here, just below that low? That was some Italian sooted fellow in the city running the stop losses down there. Okay, I only bought it. That was Friday, that was Thursday, that was Wednesday. Yeah, just as it closed on the open on Wednesday morning, just there somewhere at 7, and it's moved up very nicely. And that's because of the move up in natural gas that we'll get to in a moment. And I know that Stan came through an awful lot of oil stocks earlier, and we'll get to the reason for that in a second as well. But that's all I've done during the course of last week. Now, Tugela, I'm holding the stock in South Africa, and because it came out of Anglo, and I haven't touched that portfolio in years, to tell you the truth. There's a bit of noise in the background there, folks. I don't know where it's coming from, but we're on a 62% retracement here. The fundamentals of this stock are great. The technical position is good, but the damn thing is falling, as you can see, and that's a function of mostly a little bit of energy prices, but certainly a function of the inability of Thungela to get their coal to port because of the near breakdown in the South African railway system, which is a complete and utter, I'll use the South African expression, a kohrs. That's a train smash, okay, a kohorsie. This level looks good. I haven't bought any yet. It's on a sell. But if we start to look now at the old near perfect indicator, which is a very, very strong measure of momentum, it's just about, or has, I'm not quite sure, I'll wait for the 3-day signal, but it's just about to give a cross. Now, one little worry here is that this is falling, and that's also falling, and that's telling me that momentum is increasing to the downside, which is always a worry, especially on a big measure of momentum like the RT40. But maybe Steve can commentate on this. We're seeing massive reverse divergence from here. So I would be, Steve, if that signal does come around, and the little thing, I think this is so cool in this when you get used to the format. The 5 of the stop and the 40 of the stop. When the 5's above the 40, in between is blue, and when the 5 is below the 40, in between is red, and you can't get it easier than that. So when we do get a signal here, and we get a bit of blue between the moving averages, and Dr. Toledo's buy signal kicks in, then I think there's a big move here, folks. And I'm going to talk about oil price in a second, but I'm waiting on that. We spend an awful lot of time waiting and stalking. And if you ever get the pleasure of going to the Kruger Park in South Africa, you'll notice that the lion never actually hunts after the fastest buck. He always goes after the slowest one because it's easier. So you sit and wait for the plum opportunity to come around, and that waiting is not easy, but you only need 3 or 4 good trades a month to make yourself a very, very decent living as a swing trader. Gold, well, gold, I think myself, and this software is getting in the way, I think myself we've got something like this going on at the moment. I could be wrong. I was short of it last week and I got stopped out with a small profit. I was short twice. I'll show you the 4-hour chart. I was short from here and I got hoofed out there on a trailing stop. And then I shorted it there and I got hoofed out there on a trailing stop. And I went long here again, and I'm long, and I've held it over the weekend from 30. So there's 20, and stop loss is at entry on that. So long from 30. I think myself that this is going to go somewhere like this and then back down here. So I think we probably got more weakness in the gold market, certainly up until the 22nd. We're on the 4th today. So what we've got 3 weeks odd to Powell's decision on the 22nd.
Sorry, I've taken it off.
Thanks, Joey. I was worried about copper, folks, and I worry easily. My son tells me that I'm not happy unless I've got something to worry about. But the copper price was rising in a bear flag. And I still think we have to be very, very worried about that level, guys, if you're holding commodity stocks, because if that level goes, this bit could be bloody well replicated. I'm hoping that with China opening up, although they seem to open up and close down with gay abandon, but that we're actually going to hold. Now, there's a lady in our room, I don't know if she's there, she's an expert elliotician called Diane, and she tells me my count might be wrong here, but that's a very, very important level on copper, and we can see that this exchange traded fund, which has got all the usual suspects in there, so it's got Anglo, Rio, BHP, etc., all in there, and it had a very, very good week last week when that support held. So I'm still holding that. That's one of my biggest positions, BlackRock World Minerals, that and Shell. So I am optimistic about commodities. I would like to get, if we got to the peak US interest rates, and interest rates are going to be discounted into the future of falling in the US, then with any luck that'll cause the US dollar to fall and commodities will do better. But we're probably a way off that yet. Glencore, I was well up and the darn thing came back. I'm still holding the stock. Now oil. And Stan, I noted in your look around on those watch lists, an awful lot of oil stocks were coming up. And I think this is the reason. This is crude. This is a weekly chart and it's in dollars. And we can see that we've had this one god-awful range that's been going on now since October last year. It would seem to have broken this trend line and then went back and kissed that trend line and come off that trend line. I think there's a fairly decent support level here. Now, this is the MACD, moving average converging diverging, made put on paper first by a great guy called Jerry Appel. And I studied the MACD with Mr. Appel and his son. And the MACD on a weekly chart. Now, Appel himself, although the MACD is applied to 5-minute charts these days, Appel himself managed money, and he managed one hell of a lot of money, him and his son. And he only used a weekly MACD for his trading decisions. And this MACD has given a signal to buy, and that signal has been preceded by this divergence that goes on for one hell of a long time, since October last year. No, October 21. That's a long time. So I think that technically this wants to go. It's been sitting in a range here for a long time, certainly this level, and clearly if it falls through this level, it'll go to 60. But momentum and technically everything's saying that this wants to have another go. And I think that perception plus this good week up is the reason you're seeing so many oil stocks. I'm holding two of them. Shell, which again, whether it's me or whether it was that blind pig, I don't know, but I bought into it there. Many of our customers in the UK took much, much more aggressive stances in small oil exploration companies and small oil producers, and they've produced a much better return than I have. But if I'd mentioned those, the FCA would have sort of grilled me. They would have hauled me out and grilled me for recommending low relative safety stocks. But you can't go far wrong with the regulator if you recommend Shell, because all their pensions are in Shell. So this has moved up very nicely indeed. Again, I can see, maybe you can see as well, this big smiley face. One of my very good friend of mine, he earns about $500,000 a year on basic for a big American investment company. He says the only thing that you need to know in technical analysis is this. That's a smiley face, that's good. That's a grumpy face, and that's not good. So if he sees smiley faces, he reckons that the market's going to go. And if he sees grumpy faces, he says it's going to go that way. So that's a smiley face. And this bit should be repeated. And it's taken forever to break that obvious neckline. And the target from the neckline is very self-fulfilling. So I think we've got a bit of strength here. And certainly if the oil price moves up the way that MACD weekly suggests, then this should in fact have a nice set of legs. Now, I've only recently got into BP. I bought into BP, guess why? There is a ascending triangle, and I bought into it just at the break. And it went very nicely. I took off half, stops at entry, and I'm thinking of buying in again. Because I think that from here, this can actually do the same again here quite nicely. So that'll be one of the things that I want to try and think about this week. And I'm glad that Stan's analysis is showing that oil stocks seem to want to move in his part of the world, because they're all going to move together. Interestingly enough, there's a very interesting article in the Times today where the new CEO of Shell makes a case for increasing production. Very interesting read. Natural gas. Well, it fell off the side of a planet here, didn't it? My God, it fell and fell quick. Seems to have found some support down around these levels, and a very good week last week in natural gas. And that's probably that company. That's probably why it moved up out of that triangle. And certainly, I don't know whether natural gas is going to go up from here, but better to buy it here than there. So that's a classic Elliott wave picture. 1, 2, 3, 4, 5, A, B, and C. Now, because the B wave took out wave 5, this leg down is called a killer C wave. If you were writing a book on Elliott, you would have to have that in as a killer C wave. This is called an irregular top. Whether that's any good in making money out of markets, I have no idea, but never let the truth get in the way of a good story. There's the weekly MACD. On Serica, which is a natural gas stock, which has had a great run. One of our members had bought into that at pennies, 5 pennies or something, and 5 pence, should I say? And he has got 1,000 bagger in it now. his dividends. When I see him at an investment show, he wanders around with a big grin on his face like a Cheshire cat from the dividends. It's also showing this reverse divergence on the MACD. Again, we've got this resistance, which has become support. Those of you that know my work will know that that's what's called a spring. And if this moves from here, it should move very nicely indeed. So this signal is very close, UK people, and we'll dissect that in detail on Monday afternoon. Now, Stan, that Tongela stock and Serica stock is the two stocks that we've elected to actually practice our skills at the VectorVest Monday afternoon sessions on the near perfect indicator. And this is Serica. I know that Steve RT40 is already bought in because Steve likes to buy when he sees the crossover and a trend line break. I think it's a great signal. We still got red between the two moving average, which is saying that the 5 is below the 40. And if, there's no doubt if you do wait for them all to pitch up at once, all the good signal you get in a bit later than the signal itself. You get nothing for nothing, but it does, when both come, then you do get a safer move. I haven't bought in yet, and I think as soon as I see a little bit of one buy signal here, I'll be buying into that. I haven't done anything yet, but I am in natural gas via YU. Out of the afternoon, that's all I've got, folks. Out of the afternoon, I really like the look. If we see oil, a weekly close, bullish weekly close, then I think we're going to see a major run in oil stocks. Stan, that's me all out of air, sir.
David, that's pretty awesome. Thank you so much. You've covered a lot of ground. I think you've answered pretty much all the questions that were coming up in the chat, and your focus on oil, I would agree with you 100% on that. And several of those terrific oil companies are showing up on our scans now. So thank you very much, David. I really appreciate it. Looks like you have a lot of likes coming in, and that's pretty terrific. And if you do want to watch David's weekly webinar, just go to the UK. Under the resources, you'll see events and webinars, and click on it, and you can register from the link that shows up there. Pretty fantastic.
You have to click on education, folks, to find the link. That confuses quite a few people on the new website. You got to click on education, and then you go to webcast things. So,
okay, all right. Thanks, well, listen. Thank you very much, David. Have a great rest of your weekend. Really appreciate it. And I'll just grab the screen back.
Please. Bye-bye, everyone.
Okay. All right. Well, listen, that was awesome. And we've got an awesome presentation coming up for you. Last month we heard from Dr. Ed Subak about thematic ETFs and some great ideas there. And Mike Simonato, his trading thesis, he's presented on My Three Friends and long-term investing. And here's another segment, Trading Made Easy, the advantages of ETFs. So Mike, if your mic is ready, I've got the slides ready, and I'll do the advancing for you. Just give me a cue when you're ready to move forward, and I'll move forward.
Can you hear me, Stan?
I can hear you just perfectly. Thank you.
My sincere apologies to Dr. Paul. I don't know what the noise was, but I apologize.
We thought it might be Ollie, but I did chase Ollie out of the room, and there's no more noise. No more noise after I got him out.
My sincere apologies.
Oh, no worries. It wasn't a distraction at all. So we're all good.
Okay. As Stan mentioned, this is Trading Made Easy, the advantages of ETFs. I wanted to title it Trading So Easy Even a Window Cleaner Could Do It, but Stan wanted to keep it classy, so we'll go with this title. Okay, next slide, Stan. So first off, this presentation would not be in existence without Stan and Bob Turnbull. What you're going to learn today is things that I have learned from others over the years that I've managed to put together into a new trading system. The last presentation I did was on long-term investing. It worked great, made a ton of money. I showed I had Shopify, Amazon, Apple, and made a killing. Like, I actually got a phone call from my tax guy yesterday. He says, "Are these numbers real?" They're real. So it works. But I mean, everybody's a genius in a bull market. And because of my clientele and a few other things, I knew things were about to change. So sold Shopify in 2021. I'll get into that in a minute. Sold Amazon last year. Took the bag of money and said, "Thank you." I still own Apple, full disclosure. Now, I'm in Canada, so some things I do in Canada, some I do in the US, but for simplicity, everything we're going to see today is US ETFs. But this can be done anywhere, and I'll highlight how anybody with any trading system can do this as well. Now, a little bit about me, and I'm only saying this because it ties into the presentation. Life started out very good for me. Had amazing parents, taught me the importance of a work ethic, treating people with respect, money management, gave me all the life skills I needed. And I had a chosen career, shall we say, and life couldn't have been better. I played in a band in Expo 70 in Japan. Needless to say, we were rock stars. Everybody wanted our picture with them. Autographs when we came home. Those that know Ontario, the crowds were lining the highway right from Orangeville all the way to Collingwood, and it only kept growing. I can't go on because I'll get emotional. Something I'll never forget. Sports, I was big in sports. I won a gold medal racing skiing, won more golf tournaments, fishing tournaments, got my name in Field and Stream magazine. You name it, life was good. And everything was going great. I was moving up in my chosen profession. I got into management, took all the courses through Cornell. Everything was firing in all cylinders. Even had a professional photography business. I actually got paid to photograph concerts, if you can believe it. So life was perfect. Until one night I was going to work and I got hit head on by a drunk driver driving a hillbilly pickup truck with a full camper unit in it. The camper unit separated on impact, hit the front windshield, collapsed the roof, and needless to say, I was hurt pretty good. And the company I was working for had devoted most of my life to, didn't want to get stuck paying, long-term insurance. So they pulled a move on me, which allegedly wasn't cool. And so I was forced to quit. And the injuries were so serious, I hate being cold. I had to lay in a bag of ice cubes every day for 30 minutes to get the swelling down so they could see what all the damage was. So that ended my career for there. And I tried a few other things, but everybody wanted me to be dishonest, and that is not me. I actually had one person actually say to me, "There is no room for conscience in this industry." I thought, okay, not for me. So we thought, we'll try our own thing. It didn't go quite so good. At the low point, we were driving to Toronto, which is 2.5 hours, to clean a condo for $100 a week, because that's all we could get. And the concierge hated us so much, they gave us an $80 parking ticket every time that you couldn't fight and would block us from trying to go into the elevator. Our furnace died, so we had no heat. Our house temperature inside was 30 degrees Fahrenheit, which is a little below 0 Celsius. Somebody that was at the church we're going to at the time said they could sell us some slab wood for $50, so we gave our last $50. The only drawback is it was so wet, couldn't burn it, and it was so full of bugs, our walls and curtains were covered with white moths. And we still joke about this today. When you've hit rock bottom. We're going down to Toronto to clean the condo, and even the homeless snubbed us. So when you get snubbed by the homeless, that tells you you've hit rock bottom. After that, we were able to get our furnace going again. A friend helped us learn window cleaning, and we went from going to $100 a week, driving 2.5 hours each way, to make $20,000 a month, and not looking back. We got a client list now that people could only dream of having. So the purpose of this is showing that life doesn't always go bottom left to upper right, and you have to learn to adjust. And what you're going to learn today the dates I know won't coincide. I'm trying to keep this simple. I would have traded it differently, and I'll highlight that when we get into the graphs. And again, some trades I would do in Canada, some US, but again, to keep things simple, we're going to just deal with the US. So to be successful in trading, you need to know when to adjust or adapt your strategy. Because again, when the market's going up, everybody's a genius. But how did everybody feel in 2022? There's a lot of people struggling in 2022. So fortunately, thanks to Bob Turnbull, I was prepared. Because even though I was kicking butt and taking names, I was making insane amounts of money, Bob Turnbull kept coming out in his strategy saying, highlighting the risks of long-term buy and hold. And he said, during the pullbacks, you can take a big hit. And see, in COVID, my reasoning is, okay, everybody's stuck at home, everybody's shopping online, kids are learning from home, they need computers, that's Apple. I'm fine and still okay. But Bob got to me. He said, I got to look at this. And people had said, you don't make money on the downturn. I thought, well, it goes up an escalator, down an elevator. How can I not make money in an elevator? So I did a lot of testing. And want to, again, thank Bob, Stan, but also the VectorVest community, people such as Don Fanstone, Michael Thomas Ellis, David Gorwitz, the list could go on and on because of their sharing, their generous sharing. These are guys that are humble, because when I asked permission to say names, I was even told as long as I'm not centered out. Humility is a big thing with me. That's why I respect people like Warren Buffett. So what you're going to learn today is things that I have learned from others, and I've just adapted to form a strategy. Next slide, Stan. So here you see the 3 stocks I owned, made a killing on them. Life was good. But again, Bob got to me. Now, what do you think would have happened in 2022 if I hadn't listened to Bob? If I had a thought, no, I'm all that. Who's Bob to tell me? I'm smarter than him. What would have happened? Next slide, Stan. Sorry, next one. Yeah. Now, you ever have a day when you just need a hug? If that was my portfolio in 2022, a hug wouldn't have done it. It'd be more like, where the liquor at? That would have been devastating. Fortunately, it didn't affect me. I still own Apple, full disclosure. And you'll see the dates go to June 15th. I'll explain why in a minute. So with Bob showing the risks, I thought, all right, I want to build a portfolio on the upside and the downside. So what I did is I thought, okay, Bob always highlights the NASDAQ. All right, he's always highlighting TQQQ, fine. TQQQs in the portfolio. Short side is SQQQQ. Now, Warren Buffett, Susie Orman, Dr. Paul, they love the S&P. All right, and Bob Turnbull even had the S&P as part of his strategy. So S&P's in there as well. And what I learned from others posting on Facebook from the VectorVest community, they like the semiconductors, which is Soxel and Soxus. And with testing, I found out, yes, they're quite good. So there's my 3, the NASDAQ, the S&P, and the semiconductors. There's a core portfolio. Now, full disclosure, for a while, there's the bullish and bearish. Now, I also set up bullish and bearish portfolios. When I first started in the market, I had a client who was a professional trader, and he got me into futures trading. And I love natural gas. It was easy money. You always bought late October, held till say mid-December, took your bag of money, life was good. And so I set up bullish and bearish. There's my core portfolio, but I also set up bullish and bearish for natural gas. I did bullish and bearish for oil. Did bullish and bearish for gold, and bullish and bearish for crypto. Because what I found for a while, crypto traded lockstep with the markets. And 2 that I'd highlighted in my emails was Riot and Mara. They actually outperformed a lot of these 3. So on an up bull market, I would trade Riot and Mara as well. Good returns. So anyway, there's my core portfolio. Next slide, Stan. So I've got all my watch list built. I'm all set. Cool. Now, one thing in futures trading is a little different than stocks. What I trade is price action. So what I will watch is, okay, nat gas is up 8% today, it's down 6% tomorrow. I'm not going near that. As I said in my last presentation, that if I look at a graph and I have to chug some Pepto-Bismol, no, not interested. I want smooth, and I don't care if it goes up or down, Mike's going to get paid. Now, one thing that I learned from professional traders is while most people are off during the holidays, the smart ones will watch for a potential trend change over the Christmas holidays, and they'll watch the market close. So next slide, Stan. Now, the 79 I've shown in the past is a favorite of mine. If you look, the 79 is the yellow line, and it acts as support in an uptrend, and it acts as resistance in a downtrend. And you can trade that quite successfully. And I do. The 79 is perhaps one of my favorite, and that's from the good people in Atlanta, Georgia. They came up with that. I love it. I trade it and use it big time to this day. Next slide, Stan. So remember, things change over the Christmas holidays. So here we are looking at a market timing graph in the USA from, I think it's, I can't even see that, but I think it was December 15th to January 15th. Now notice how the yellow line, the 79, is acting as resistance. That's bearish. So that tells me, okay, even though everybody's still wanting bull, this is going to turn down. So that tells me, okay, I want my bearish core strategy. And see what happens is the pros, they don't use the 79, obviously. But if they see their signal, it's bearish. Look what happens when people come back from holidays. Look at that big red candle down. What's that tell you? The pros know it's bearish and they're taking positions. So the smart ones have taken the position before that day. The ones that partied over the holidays have come back, seen what's going on. They've put their positions on. As Dr. Paul would say, game is on. So we've got our three core, the NASDAQ, the S&P, and the semiconductors. That's our core, but that's only three. I want to round it out to 5. So next slide, Stan. So here's natural gas, which is, again, my favorite. If you look, there's a big run up starting at the 1st of 2022. But notice that big cavern. That'll come into play. The big pullback. Did go up again, but then it sold off after that. Now, that right where Stan's arrow is right there, that's seasonality. That's November of 2022. Remember I said before, nat gas usually prior to the winter, and at this time, remember with the war in Ukraine, Europe was, really sweating natural gas supply. So prices were going back up, but then they forecast a milder than normal winter. Europe got its problem solved, nat gas continued to tank. So remember that. I got in, the first of the year, I could see the move up. Cool. That's my 4th position is long natural gas. I bailed the middle of June, which is when this thing was tanking. And because my business is so soon, I didn't trade any of these. I waited till the end of the year again. But I find these graphs really easy. It's Yahoo Finance commodity graphs, really easy to trade. The pros would call that valley there, in June, and then the next peak a 2B pattern. I don't know if they still do, but a 2B pattern just tells you it's about to tank. So it's all good. The other is oil. Notice oil, same deal, big run up. Big run up. So that's long oil. And then, of course, it fell off a cliff. And lately, see at the very end, it's just like trading in a channel choppy. So you'll understand why I didn't go oil again. Now on oil, there's 2 ways to play it. There's an oil ETF and there's an energy ETF. And my test showed the energy ETF outperformed the oil ETF 95% of the time. So I trade the energy ETF, but for the sake of this, I've added the oil ETF as well to show the difference. So now we've got our portfolio. The NASDAQ, we are short the NASDAQ, we are short the S&P, we're short the semiconductors, we're long natural gas, and we're long oil energy. So how do we make out, Stan? Okay, sorry. One thing, because it's a mix, what I will use is the watch list average graph, because that shows the actual portfolio. So notice going up nice, it's the blue line is the 20 simple moving average. So when it's hugging the 20, it's acting as support. That's extremely bullish. But notice middle of June, it tanked, and I mean tanked hard. In 2 days, big red candles, big drop. You don't have to tell me twice, I'm out. I'm not going to wait for it to pull all the way back to the 79 and I give up all that gain. When it's falling that hard, and remember, the natural gas graph was falling hard and the oil graph was falling hard. And if you looked at the market timing graph, it was forming a base. So that tells me, okay, there's about to be a change. I'm out. I'm busy with work anyway. Let's take the bag of money, be done. So how did we make out, Stan? So here we are. In that time, in the 6 months, we made 99.36% return, while the market lost 21%. Now, look at ERX. That's the energy ETF. It returned 97.97%. USO is the oil ETF. It returned 58.54%. Still good. I mean, who wouldn't like 58% return in 2022? But I'm just trying to highlight the difference between the energy and the oil ETF. But still, again, you doubled your money in 6 months. Life is good. You take your money, you take the rest of the year off. And again, with my business, it's a funny thing. The clients seem to think when they're paying me a lot of money to wash windows, that should be my focus and not the markets. So I guess I need some new clients. I hope they're not listening and they don't fire me. So BOIL, that's the natural gas. SQQ obviously is the NASDAQ. ERX is the energy. SOXUS is the the semiconductors, and SPXU is the S&P 500. And then of course USO is the oil. So very simple. The graph told you when to get in, when to get out, and there's the results. I learned early on, and I did a lot of testing, and I'll get into this a little later, that I don't have what it takes to pick the winning stocks. I'm not Stan, I'm not David Paul, I'm Michael Window Cleaner. I still have blue jean bell bottoms and platform shoes from the 70s, thinking they'd be cool and they'd come back in fashion too, but apparently I was wrong on that as well. So I want to keep things simple, and ETFs do that. They let you keep it simple. You don't have to try and figure out which stock's going to be cool today and gone tomorrow. ETF is a very simple way to trade market moves. Okay, next slide, Stan. So now work's done. I shut it down because of cold. Now I get to look at the markets. My email 2 weeks ago, I think, showed what I do in gold. It usually has a bull run December 15th. But anyway, here's the market timing from December 15th, 2022 to January 15th, 2023. Now notice this time, the yellow market, or the yellow line, which is the 79, is support. So that tells me there's going to be a bullish move. And again, people come back from holidays, look at the big green candle. The pros are back, game on. So this time I'm going long the market. So that will be the TQQ, the long S&P, the long the semiconductor. And so there's, now I've got my 3. And natural gas, as I showed, started falling hard 1st of December. So I was short long before this, but for the sake of this demonstration, nat gas is falling, so you short natural gas. You're long the markets, you're short natural gas. And remember, we showed oil. It was zigzagging, it was flopping around doing nothing. So oil really wasn't of interest. But what I did notice, and next slide, Stan. Oh, sorry, before I get into this, there was two other graph styles that I really liked that came into play in 2022. Next slide, Stan. One was the 4 and 44 simple moving average cross. And again, even a window cleaner can figure out when you get the buy signal. I don't know who invented it. I tried to find out because I want to give credit where credit is due. I don't know who came up with this, but I like it. It's accurate. Is anything perfect? No, but I like it just to double check what I'm doing. And of course, one I really like, the next slide, Stan, is Stan's 5 and 40 of stop. I'm not smart enough to figure out the MPI yet. I'm working on it. I'll get it. But again, who can't figure that out? When you just look at it, it's easy. And that's what I like. I want it simple. Simple is good for a window cleaner. So now those are the three that I use now. And I use them to, make sure I'm on the right side of a trade, etc. Okay, next slide, Stan. And as I said, I trade price action on futures. Not only myself, everybody noticed that Bitcoin flatlined. And Dr. D, that's one of his favorite graph styles, is when you get that flat line, what you see there, that tells you there's going to be an explosive move. And Bitcoin had oversold. It was down around 16,000, 16,500. So when I see that flat line, that tells me, yeah, this is too good to pass up. To me, cryptocurrency is stupid. I can't even believe it's legal, but Mike wants to get paid. So oil's not giving me anything. So I'm going long crypto. Now, before I had always promoted Riot and Mara, but a new one came into play called BTCS, which I like even more. And so there's my new portfolio. I'm long the market, which is NASDAQ, S&P, long semiconductors, short natural gas, and long BTCS, which is crypto. How did we make out? From January 5th, or January 3rd, sorry, till February 3rd, we were up 94.95% in just the first month. The market was up 9.66. So again, simple, not making this complicated. You've seen the transition like the pros teach. You take your position, game on. You've got your portfolio, you've got your watch lists already in place. There's your returns. I can be done for the year. I don't need anything more. I'm happy. Mike got paid. So the nice thing about this strategy is it doesn't matter what the market's doing. If the market is in a bull run, cool. Soaring on the wings of eagles, life is good. Mike's getting paid. What if it falls off a cliff? Interest rates keep rising, the economy collapses, and we get a big collapse like we did in the financial collapse. Cool. I know exactly what to do. I don't have to worry what stock's the best. I don't have to worry, what's hot today and going to be gone tomorrow. And you have to understand, I've kept this really simple. Can you imagine this in the hands of somebody like Stan? Like Stan wouldn't keep it simple. He would have a descending channel, and he would catch moves. Like the first one, there was a move from March 15th to March 30th. If you caught that little bull run, TQQ returned 52.26%, Soxel returned 48.15, and UPRO returned 33.44, just in those 2 weeks. So people like Stan, who really know their stuff, Dr. Paul, you think of Phil Logan who can identify the waves of the market. Can you imagine the money these guys could make trading this? Because they could catch all these little intermittent rallies as well, both to the upside and to the downside. So this is a strategy that swing traders can use, longer term hold guys could use. I'm sure even day traders could use it. It's simple, and it gives you the results that you could only dream about. Next slide, Stan. See, we're running out of time here. So does this work? Now, I've did a lot of testing on this, but I'm going to keep this simple. There was an ETF that was bragged to cover Amazon, Apple, Netflix, Meta, which is Facebook, and Google. Those were the 5 stocks that this ETF was supposed to cover. Now, full disclosure, when I did a deeper dive, it does a little bit more. But you look at this, those 5 stocks, there's only one up anywhere, and that's Meta, Facebook, and they were laying off tens of thousands of people. Who would have bought that? Look at FNGG, the ETF covering them. It's right up there at the top. And funny thing is, this was the worst weekend to do this. If you did it the weekend before or the weekend after, FNGG far outperformed all of those stocks. Nobody was even close. And I've tested oil and energy as well, where there's 30, 40 stocks. And at best, you might get 1 or 2 outperform energy, but I know I'm not smart enough to pick those 1 or 2. I know it. So ETFs are a simple way of trading that gives you the results and in a lot of cases outperforms the individual stocks. So it's just something to keep in mind. You get the results without the stress. Less stress, superior returns, don't have to figure out what stocks. The nice thing I like about it, like last year, everybody's losing their mind because they only trade long. Well, last year was not a good year for long. This strategy lets you go long or short. And not only that, but you can have long and short positions in the same portfolio, which I've shown. So whatever the market hands you, you can profit from. The other nice thing is you can do leverage. In the USA, there's 1-to-1, 2 times leverage, 3 times leverage. In Canada, the max is 2 times, but again, you get the results. So does this really work? I'm hoping that this has showed you yes. Next slide, Stan. So as I close all the essays I send out, this is nothing more than my 2 cents. I hope it's of value. I hope it's of interest. And I hope I've shown you a very simple, easy to do strategy that even a window cleaner can figure out.
Mike, I think it's a tremendous strategy and I love it. And I actually love the simplicity of it. So I wouldn't make it any more complicated than you've kind of taken away the complexity with your ETF strategy. A lot of great comments coming in. People are loving it. Let me just read one from Erwin here. So Erwin in Saskatchewan says, there's great wisdom hidden in Mike's strategy. His simplicity in trading would be most people's treasure and best year ever. Very good investment advice. And I couldn't agree more. Stephen was asking when the slides go out, and they will go out on Monday afternoon, Stephen. So you will get the slides. You'll see all the ETFs that Mike has been trading, and he's had an incredible year in a year that was a struggle for most of us, 2022. And it's a really simple strategy. Love the graph layouts, and he's provided it all. Let me see. I'll just check if there was any other. Oh, one question that came in more than once, Mike, is on the exits. Were you mostly exiting on sort of the market indication or setup, or is it the price of the ETF?
It's a combination, Stan. As I explained in the first one in 2022, when things started to fall off a cliff, first thing I do is I looked at the natural gas graph falling hard, looked at the oil falling hard, looked at the market timing, it was flatlining. That tells me I'm bailing. I'm not waiting until it hits the 79. I'm saying thank you, take my bag of money, I'm done. Now, in the 2023 one, again, I said in futures, I trade price action. So when Bitcoin, for example, started taking off, it was at 16.5. It went straight up to 23,000, and then it flatlined at 23,000. And because I don't trust crypto at all, I think it's as stupid as it can be, I bailed. I was up 200 and some odd % in 5 weeks. Thank you. Take my bag of money. I'm gone. Now it did go down to 21, then it went up to 25. Now it's down again. And what you have to understand is a lot of these moves happen when you can't trade. For example, I think it was Thursday night, Bitcoin fell $1,100 at between 9 and 9:30. Well, there's nothing you can do at that time. The same as it trades. This is the one thing that trades all weekend. And a lot of times on a Saturday afternoon, Bitcoin will be up $1,000. Again, you can't do anything about that. And if you're in a position that goes against you, you're euchred. And the same thing is, like I say, it's too high risk. But when I see a flat line like that, like Dr. D says, that's just thank you God. This is good. You don't have to, ask me twice. But again, as soon as I see it hit 23 and flat line, I'm out. I don't care about moving edge. I'm out. And just after, like, the reason I'm not that smart. I don't want anybody to think I'm not smart. The reason February 3rd was chosen is there's a lot of work involved in putting these together. I'm the most pathetic person on the planet on computers. Stan had to do the slides. I feel so bad that he had to do all that. So I'm getting the information to him early. I'm not that smart. Now, right after that, the markets went in a very tight channel. Now, again, even though my lines are saying one thing, a channel is telling me something else. When it's in a tight channel, that tells me at some point there's going to be a breakout one way or another. I'm already doubled my money in 5 weeks. I take my money and run. And then I'm got the cash ready to go when there's a breakout out of the channel. And like I say, Bitcoin, no, I'm not going back to that. I looked at oil last night. It's still choppy, so really no interest there. Nat gas is starting to raise up. But again, I doubled my money in 5 weeks. I'm not worried. I'm looking for something that's a little more sustainable. Like I said, I'm a window cleaner. That's all I am, is a window cleaner. I'm not Dr. Paul. I'm not Stan. No hope of ever being at their level. But what I want to do is network with some people that will look at things different than me, and we work together. And that's the nice thing about VectorVest. You work together. So that's the last thing I need, is people to help me to overcome emotion issues and, give me a different look. And then together we all make money. And that's the purpose of these. Stan's put these amazing presentations together. Hopefully it helps people. And hopefully I didn't, I hope I answered the question, but it's a little more complicated than you'd think, but it's not that bad. It's just, again, I've been doing this since the financial crisis. Futures I trade on price action. When I see Bitcoin fall or flatline at 23, I'm out. I don't care what it does after that. It can go to 60. And if it does have another big bull run, I know what to do. If it crashes, I know what to do. It's the same as markets. If it goes up, cool, Mike gets paid. If it goes down, cool, Mike gets paid. That's all that matters to me, is Mike gets paid.
Hey, that's what matters to every investor. That's why we're all in this game. And Mike, you've given everyone some really terrific ideas and a methodology that is simple to follow. It does work in Canada. There's ETFs that mirror the ETFs that Mike has shown us today in the US side. So keep an eye out for those. And I really want to thank Mike for this amazing presentation. I know he spent hours and hours putting it together and did a terrific job on it for everyone. So the slides will be going out on Monday afternoon from VectorVest. If you don't get them for any reason, please check all your email folders. Things wind up in spam or they wind up in junk. And this will come with in an email from myself. So do make sure you check your folders. But if they don't reach you for some reason, then you'll want to call either product support at the 1-888-658-7638, or just drop me an email, stan.heller@vectorvest.ca, and I'll be happy to send them off. Mike, the great comments just keep coming in. People are anxious to get the slides. So
like I say, I just hope it helps somebody.
Well, yeah. Fourth below says brilliant guests and presentation today. And yeah, I have to agree. Our thanks again to Mike. Our thanks to Dr. David Paul. Our thanks to Joey in the background, making sure that everything runs smoothly today, and spent time with us on that. So we really appreciate that. And if you have any questions, somebody had a question about the earnings search. It's a very easy search to set up, and maybe I've even got one. I don't know. Let's have a look here. Yeah, maybe oh, there. So for example, here's, if you want to find earnings 3 days out, that's a very simple search. Earnings date less than or equal to 3 days out. And of course, if you follow Mike's ETF strategy, you don't even need to worry that much about earnings. ETFs don't get affected by earnings. So shared that with you, and thanks again, everyone. Thanks for hitting that like button. That really helps us grow our audience, and we know what to do in future presentations. Next month, we have Dr. Barbara Starr teed up to present, and she's an amazing instructor and technician as well, so stay tuned. Thanks, everyone. Have a great rest of your weekend, and we'll talk to you again soon. And thanks again, Mike. Appreciate it.